Yo, what up? I'm back. Yeah. So, I'm gonna be. I can't backtest still because the fucking government doesn't allow for trading view and stuff. So, because government doesn't allow for trading view. Damn, I just heard that. That's crazy. Anyways, basically, right here, you see this so I can't fucking back this because this government is just fucking annoying, you know what I mean? But yeah. So you see this fucking 1 day fair value gap over here? So this fucking fair value gap, it's refusing to retrace above or below this dog shit fair value gap over here. So what do I do? What the Oh hell no, boy. Hold up. I gotta get my chat over here, bro. This fair value gap is pissing me off, bro. I can't lie. This fair value gap is pissing me off on some shit. You know what I mean? But yeah. So the first thing that I'm gonna do here, alright, is basically, alright, hold up, alright. So we're gonna use this weekly fair value gap. You see this? It's testing this weekly fair value gap right here. And then we're gonna retrace lower from this fair value gap. But it seems to be retesting this level, as you can see. London took out the highs, but New York seems to be sweeping the liquidity. So I know for a fact this is going to have a distribution leg right after. So yeah, it is what it is. But yeah, for a bit of clarity, right? My government does not allow, because you see the thing is, if you guys want to like have extra details about this, you can go to this tweet that I made. It's basically about how my dogshit government doesn't allow for any type of trading related activity because the country doesn't have any money. Once again, guys, if you guys are from anywhere out of my country, which is this dogshit country called Sri Lanka, don't come here. Do not come here. It's dogshit. If you're trying to do business, do not come here. Do not come here. It's dogshit. Alright? If you're coming for a vacation, perfect. But if you're coming here to do a business, do not come here. I repeat. Alright? If you want to refer to this tweet, it explains everything in detail. Why and the restrictions, right? So if you're trying to do business, do not come here. Simple as that. Alright. Okay, so with that out the way, let's see what price is doing. You see, price seems to be sweeping liquidity. Okay, now we see a bit of a bearish momentum right here. So London took out the highs, obviously. Sydney was consolidating, and Tokyo, the Asian session, seems to just push the market high, and then London took out the highs, and then took out the lows, and then once again took out the highs. So overall, London took out the highs, and let's see what if we can find a proper bearish fair value gap to sort of go lower, because I really doubt it would push higher than this weekly fair value gap, because this is the weekly, this is the daily fair value gap. No, this is the weekly, this is the daily fair value gap. No, and this is my bad. This is the weekly fair value gap, and this is the daily fair value gap. So see, we are in fact refusing from this level, which is the weekly. So because of this specific reason, plus there's news that Dow Jones is not, it's refusing to push above 40k, right? Poised for high open on PPI, exactly. So it's opening high, but if we see a fair value gap towards the downside, we'll entry on like 5 minutes if we miss like a proper entry. But I'm gonna go for, see, we're seeing red news over here. So I think I still cannot understand how this website works, bro, because it says 6:33 right here, but it says we're at 10:45 p.m. Like, how does that make sense? You know, it says like over here it says it's 10:45 p.m. That makes no sense. But yeah, I'm expecting price of, I think it was 6:40 p.m. Yeah, so between So there's a bit of a red news folder there, but what I'm expecting right here, so price to head lower because of that specifically. So yeah, it is what it is. It's let's see if we can get in on a proper fair value gap and retrace to, at least if we can like short from like this range, that'll be a proper 1 to 2, isn't it? Yep, proper 1 to 2.3. So if I can at least catch a 1.1 to 2, that'd be great, right? So yeah, I really doubt it would go lower than this anyway, because we took out the highest, so now we should go lower. But I need to see a proper fair value gap, because yeah, let's see, because I cannot backtest for anything, bro. Like, my government is so fucking bad, bro. I'm sorry, like, I am sorry about the words, but I just cannot, because like I can't backtest because I need to do it through one of my friends, because this government just doesn't let you do anything that's profitable, you know? Just fucking... If you want extra details, by the way, I wrote a whole tweet, a transparent tweet. I don't give a fuck if some politician or big whale thinks this is like illegal to be talking against the fucking government. You could honestly suck my wee. Fucking dog shit fucking government, bro. I don't give a fuck. I actually don't give a fuck. The last thing I give a fuck is about some crook fucking minister who doesn't want the outside world to think that this is a dog shit country, because they want more money to be stolen off your fucking money. So if anyone is seeing this, do not fund anything. It goes to the fucking government. It does not go to the fucking the development of this country. It goes to the fucking government. I repeat, it goes to the government. Alright, it goes to the government, and the government is very corrupted, and they will steal your money. If you're gonna fund this fucking country, make sure it's specifically for something. And keep in mind, there's insane tax rates, which means most of your fucking money is going to the government. These faggots, I'm sorry. These are the C words, alright? I shouldn't be saying that shit, right? These are the C words who fuck your money up. They're gonna just take your money, because they're selfish and they don't want the fucking government to work. No, fuck no. It's not their intention. Fuck no. That is not their intention. So do not fund anything in this country. I repeat, if you're from outside, do not. It's a good country for a vacation, but do whatever the fuck you're doing and just get the fuck out of here. If you're trying to do business here, do not come here. I bet nobody's even trying to do business here anyway, but don't come here. Don't come here whatsoever. It's a dog shit country. Don't come here. Whatever the fuck you do. I'm just saying. You're setting yourself up for failure if you're coming here to do business. Fuck no. Don't come here. Don't come here. Do not come here. I repeat, do not come here. Anyways, that's besides the point, right? So what I'm gonna do here is take this fair value gap. If I can find a proper fair value gap, I'm gonna use this fair value gap to retrace towards the sell side liquidity right here, and then use the sell side liquidity draw. Alright, we're gonna use this fair value gap and then retrace lower, because I'm not trying to take this liquidity sweep, bro. We could expect a bit of a reaction at this unmitigated fair value gap, but overall I'm not expecting it to retrace higher, because Dow Jones is basically it's refusing to go above the 40k range, so it's safe to say that this is gonna retrace down to this sell side liquidity draw. Come on now. Come on now, man. Fuck that shit. But see this liquidity sweep right here? This is the result. You see this liquidity sweep? And so you see this is manipulation right here. And we have a distribution leg right here. So you see a unmitigated fair value gap over here. This one is wicked in, so it's mitigated at this point. But you can see that this took out on the 15 minute. You can see we took out London highs. So the next thing that I'm expecting is price to maybe have a sweep and go from a fair value gap, inverse fair value gap down to sell side. So that's my anticipation of a trade. What's going on here? I have no idea what this green line is, but I think it's good stuff. I don't know what this is about. Oh, this is good. Okay. So this TP SL. Make sure my stop loss. Switch. Alright. So we're gonna retrace down towards this range right here. It's a 18,540. Where the fuck is it? Alright, right here. It's fucking Jesus. Alright. I'm not trying to take the fucking trade off the auto block, bro. That's like basically setting yourself up for failure. As much as some people might say this is the best spot to be entering off, I need to see some sort of displacement. How the fuck am I going to confirm if it's even displacement in the first place? Unless I see a proper fair value gap. So right now, price is very indecisive. It's not really doing anything for that matter. Took out the eyes, and then now we should be seeing a bit of a sweep right here. I want to see a proper sweep and then retrace lower. So all right, so let's just wait for a proper fair value gap to be formed, an inverse fair value gap, and then we're gonna take it towards the downside, down towards sell side liquidity. Simple as that. I'm not trying to take no dog shit trade, bro. I'm tired of taking some dog shit trades. I can't even backtest because of this dog shit comment, so I need to do it through one of my friends. So that's why I'm sort of begging him to allow me to just backtest, bro. It's very, like, it's frustrating for both ends, but what can I do either? Because if I can't backtest, I can't fucking, get better at this shit. Simple as that. My government is fucking with my future, and I don't like that shit. So I gotta fucking take action for myself. There's a lot of people in this country who rot because of this dog shit government, and I want to be vocal about it. I don't want to fucking, but you're not gonna fucking shut the fuck up. Just suck my wee faggots. Sorry. That's not because I'm homophobic. That's because I use it as an insult towards these clearly homophobic people, right? This government is also homophobic, by the way. Like I'm using that not as an insult towards like those type of people, but I'm using it as an insult. I could care less if you're fucking homosexual, whatever the fuck, right? It's just because I'm using it as an insult towards this fucking government, right? I don't mean that. Fuck no. But I do mean that for this government. I just want to insult the government. Fuck that.
All of these conditions that I mentioned, whether it's a new trend, whether it's complex pullback, whether it's a grab of liquidity of this point to
I'm sorry.
The next level before we come.
Fuck that shit, bro. I'm not sorry for the government. Fuck that. The government can suck my wee. Stupid ass government. Where's the... Right here. You can see it on my Twitter right now. This government is the reason for failure, basically.
Come lower, and therefore this move over here is all just temporary.
This is the...
We need to know how to navigate that. We need to know the telltale signs, the digital footprints, and the signatures in price action that will reveal the differences. We should not be a victim to the market. We should not just say, oh, it is what it is. Better luck next time. We should learn. We should read price action. And if you're only reading the daily time frame, you'll never get it. If you're only relying on the 1 hour and the 15-minute time frame, again, you'll probably never get it. But if you can start to read intra-session time frames, M5, M1, understand time-based manipulations, understand the purpose of inducements, understand the correct liquidity pools that are resting in the market, understanding the traps the market builds. Because if you're a non-believer of this, just go and look how support and resistance levels get induced. Just go and look how trend lines get induced. Just go and look how break and retest traders get induced. In fact, I have exact trade model on this channel, a 70% win rate trade model that I've used to make millions of dollars myself. That is exactly relying on the inducements of smart money traders and the inducements of support and resistance traders. I gave a step-by-step checklist of that exact trade model. Manipulations happen all the time. Traps happen all the time. And the way traps work is the market engineers a liquidity pool, entices people to get in, and then induces them out by grabbing their stop loss. It's a case of showing a narrative and then taking it away. So in this video, I'm not going to make a full guide and show case study after case study. You're going to have to do some research on the channel because all of the information is here. But if you want me to go through and backtest multiple examples and make a full case study and guide going through example after example, do let me know in the comments below. But right now, I'm just going to explain theory. Now, in theory, let's say we start to have an accumulation schematic. Now, you should just know Wyckoff theory and just start to understand how that starts to look like. So you'll have inducements to the high, for example, like this, where we have a build-up of a resistance level, and then we get to this potential bullish breakout. So what is that going to do? That's going to invite buyers into the market. So that's see this market structure shift on the lower time frame. Well, we know that in an accumulation schematic, you will get inducements to the high and low. And when you get something like this happening, you'll see that the market took the liquidity of that resistance level, took the liquidity of this trend line, and this overall horizontal price action, not actually a trend. This is how an accumulation schematic is, and this is where the sellers exit, the buyers enter, and we accumulate orders for a significant expansion. That expansion can be to a supply zone or a new trend. So when we are seeing this forming, the name of the game in accumulation is the spring. That spring, in other words, is a inducement. So when we see these signatures and we get a valid inducement, we know that we are establishing a complex pullback. So this complex pullback, we will just look for certain demand areas, and you say, okay, I've established the market has shifted from bearish price action, from lower highs and lower lows, to forming a breaker structure and higher highs and higher lows. So when you are forming that shifting trend, you just need to know where that complex pullback is going to terminate, and therefore you find validated supply areas, and you know that from that supply area, you should anticipate a new bearish trend. So until then, you can be bullish, and then you can look.
That's what. So basically, what he's basically saying time is fractal. You gotta pay attention to the higher time frame.
But right now, I'm just going to explain theory. Now, in theory, let's say we start to have an accumulation schematic. Now, you should just know Wyckoff theory and just start to understand how that starts to look like. So you'll have inducements to the high, for example, like this, where we have a build-up of a resistance level, and then we get to this potential bullish breakout. So what is that going to do? That's going to invite buyers into the market that see this market structure shift in the lower time frame. Well, we know that in an accumulation schematic, you will get inducements to the high and low. And when you get something like this happening, you'll see that the market took the liquidity of that resistance level, took the liquidity of this trend line, and this overall horizontal price action, not actually a trend. This is how an accumulation schematic is, and this is where the sellers exit, the buyers enter, and we accumulate orders before a significant expansion.
Right. This is the inducement. Took out the sweep. This is the resistance. Once again, took out the sweep. In it. This is the manipulation. And we have a distribution towards what? Drawn liquidity. In other words, this is a what? PDRA on the high time frame. Simple as that. Alright. I'm gonna paste this shit on my friends' DMs real quick. Because the 2024 ICT model, I didn't really get too much value out of this, so I'm gonna keep it a buck. But you never know, right? So
that expansion can be to a supply zone or a new trend.
it is what it is, bro. It is what it is. Alright.
So when we are seeing this forming, the name of the game in accumulation is the spring. That spring, in other words, is a inducement. So when we see these signatures,
The fuck? Things are not clickable. Can you modify it, please? So pissed, bro. Alright, sorry. Check the YouTube 3 more vids on the way. Starts at 12. Okay. Alright, notify me. Wait, I think we need to verify a channel with a number if we wanna post links. Easy. Can you verify this? Try it. Why is my dog shit internet glitching out, bro? Alright, it's fine. It's all good. It's got posted, but overall it's just dog shit at this time. I don't know why. It just happens every single time, bro. Why has the world gotta be pissing me off like this, man? Like, you know, imagine. Alright.
And we get a valid
It's fine.
inducement. We know that we are establishing a complex pullback. So this complex pullback, we will just look for certain demand areas, and you say, okay, I've established the market has shifted from bearish price action, from lower highs and lower lows, to forming a breaker structure and higher highs and.
See, this right here is a breaker structure. It's not really a breaker structure because this is just a sweep. In other words,
higher lows. So when you are forming that shifting trend, you just need to know where that complex pullback is going to terminate, and therefore you find validated supply areas, and you know that from that supply area,
yes, this is a supply on the high time frame. It's going to be a PD array on the high time frame.
a new bearish trend. So until then, you can be bullish, and then you can look to buy. And you can say, okay, these kind of areas I look to buy to make high highs, and then you have not only extreme points within market structure, that is going to be the origination point of a push, of an expansion, but you're also going to have other types of POIs, the ones that led to the breaker structure, for example, the decisional.
Yeah, so market right now is just not doing anything. It's just sweeping liquidity, so I'm not trying to do anything yet. So when I wait, sit on my ass like Casper says. Drug prices after media care. Negotiations may be a nothing burger for big pharma. Wall Street poised for high open. Yeah, it's opening high, but it's gonna close low. So this is just a New York open. I want to wait for a perfect formation, low key. I just need to make sure this is going fine.
So when you have all these kind of POIs, you can be sure to say, okay, I'm going to start trading these areas, looking for buys until I arrive to my supply point, and then I'm going to shift my buys and look for sells. So all well and good. Kind of POIs, you can be sure to say, okay, I'm going to start trading these areas, looking for buys until I arrive to my supply point, and then I'm going to shift my buys and look for sells. So all well and good. But what was the key to this? The key to this was not this demand area. The key to this was understanding market structure shift, where we had the lower high that made a lower low, but more importantly, how we had indecision, fails to make a high high, indecision, fails to make a low and then goes on to make an internal high, internal high low, internal high. So what is that? That's just simply a trend. That's just simply seeing bullish market structure inside of a bearish leg, and you'll look to trade that complex pullback and then establish a new trend. Now, the telltale sign of this for someone that's a little bit more advanced is starting to understand how the market started to round off. We started to have that accumulation schematic, and more importantly, we had this inducement. This inducement was the fuel that allowed the bullish expansion to form. So the inducement is always going to be the fuel, and we can see, I mean, this is just a diagram, but you'll see this in real price action where you get inducements fueling moves. You get a build up of liquidity, inducement to fuel a move. Same again, a trend line, inducements and fueling a move. So this is signatures you see in price action. You've seen countless examples of me do this. This is not my opinion. This is a fact. So when you see these kind of things, you have to understand how to correctly identify this leading indicator, which is inducements, because that's going to be telling you the law of cause and effect. If you have a cause which is the market induced, it grabbed liquidity, it grabbed this fuel, it has new orders and new participants and new conditions. When you have this injection of liquidity, you have to see a reaction. You have to see market go bullish. If you have a bearish inducement, the market should follow through. So what are the signatures of this? I like to condense it down to a few that do not ever lie, that are reliable, and that is going to be in line with wisdom of the law of cause and effect. So if you get a cause and a catalyst, which is an inducement of liquidity in the demand area, we have now got an injection of buyers, and the early buyers getting taken out, sellers getting taken out, manipulation of break, retest trades, all of these things that an inducement holds, especially if this is on a time window. But this would be one major way to differentiate between fake outs and real moves. Is going to be time. Let's say a London Open, that's going to be a strong one. But what's going to be better is understanding the follow through, understanding that this inducement should lead to three things. Breaks of structure. We should see a follow through that leads to internal breaks of structure and starting this bullish trend that we see of high highs and high lows. If an inducement happens and we don't see market structure shift on a lower time frame, that inducement is not real. It's just a bearish break of structure. Another one will be imbalances. If you can see the market leaves strong bullish candles that are leaving imbalances. Imbalances showing disequilibrium. The market is showing momentum to one side. And if we are getting imbalances and not wicks closing, those wicks closing is essentially on a lower time frame retracement. So if you're getting a lack of retracements because you're getting strong bullish price action, large bullish imbalances, that is a signature of strength. That is a signature that inducement has led to a market condition that is strong towards reliable, and that is going to be in line with wisdom of the law of cause and effect. So if you get a cause and a catalyst, which is an inducement of liquidity in the demand area, we have now got an injection of buyers, and the early buyers getting taken out, sellers getting taken out, manipulation of break, retest trades, all of these things that an inducement holds, especially if this is on a time window. But this would be one major way to differentiate between fake outs and real moves. Is going to be time. Let's say a London Open, that's going to be a strong one. But what's going to be better is understanding the follow through, understanding that this inducement should lead to three things. Breaks of structure. We should see a follow through that leads to internal breaks of structure and starting this bullish trend that we see of high highs and high lows. If an inducement happens and we don't see market structure shift on a lower time frame, that inducement is not real. It's just a bearish break of structure. Another one will be imbalances. If you can see the market leaves strong bullish candles that are leaving imbalances. Imbalances showing disequilibrium. The market is showing momentum to one side. And if we are getting imbalances and not wicks closing, those wicks closing is essentially on a lower time frame retracements. So if you're getting a lack of retracements because you're getting strong bullish price action, large bullish imbalances, that is a signature of strength. That is a signature that inducement has led to a market condition that is strong towards the buyers. And lastly, we have to look at momentum. If the retracement is taking 20 candles and then the impulse is taking 3 candles, that is a sign that we have strength towards the impulse. So if we get a C,
right. So the ratio of shouldn't be overcomplicating like this, but the ratio of bullish to bearish candles. Simple. It's pretty fucking simple.
steaming inducements and then slow, consolidated, choppy price action, that is not a good sign. But if you get an
Sweeping liquidity right now. So it's going to sweep liquidity and then go towards the sell side liquidity draw. Alright.
inducement and the price rockets with large imbalance.
See, this is fucking sweeping liquidity right here. London took out the highs, but it's just sweeping liquidity on the early session of the AM session. So we're gonna retrace lower from a fucking fair value gap all the way down towards. I think I might be able to catch like a 2.5 on this if I play my marbles correctly. Right now it's just sweeping liquidity, so it's probably gonna take another half an hour-ish. That's the annoying part, but it is what it is. It is what it is. It seems to be going higher. Fuck. But it's just gonna sweep liquidity. I know that. Come on, bro. You're not gonna trace higher than fucking 8. Like the most it's gonna go to is like 19k, to be honest. But that's also less likelihood, honestly. Less likely. Bro, I can't fucking speak, man. What's up with my... Oh my god. So fucking annoying. You know? So fucking annoying. Like, I don't know why, but it's just... I can't speak.
Balances, large momentum, and bullish breaks of structure, and then you add in time, you can rest assured that you had correct inducements. So when you start to utilize these things to supplement and validate your inducements, then you have a signature to know where the direction is going. The market is going to go to the next POI or the next liquidity pool, and that's going to be fueled by the inducements. So let's say you have a market structure condition where we have a bearish trend and then it starts to consolidate. So then you say, okay, with this consolidation, I don't know what to do. So I say I take my supplies on, and I know price needs to go on to continue to make lower lows. So let's say you have a market condition like this where you have a bearish market structure and then you have zones of liquidity and consolidation over here. So you know that if price starts to come higher, tap into the supply zone and go on to make a lower low, that would be the most logical thing. Or price would just go on and see this resistance and then go on to make a lower low. So that's the trend. That is the trend speaking. Now, if price starts to come higher, tapping into this area, how do we know that price is not going to continue higher? We verify the POI and we verify the reaction. What happens if price starts to come higher and starts to come over here? How can we say that this is not an internal high, and an internal high low, and an internal high high, and therefore we should come higher like this to the next supply zone? All these questions come because we cannot correctly identify the difference between an inducement and a market structure break. So for example, if we get a price coming lower, what are people going to see? They're going to see this was a market structure break and they'll look to sell like this. Why would they look to sell? Because they see bearish break of structure from the last structure point that was holding price like so, and then they look for the nearest supply zone that led to that break of structure. And that's a logical thing to do. So if you're trading market structure like such, where you get a resistance level and then a bearish break, you will lose out in a situation where this goes on to do an inducement to come higher, and that's based on the fact that we had a liquidity pool right here, an inducement of that stop loss, and these were the fuel to come higher. So to verify these two roadmaps where the confusion is right here, because this looks like a bearish breaker structure, and therefore you sell, but it could also be an inducement, and therefore you look to buy. So the reality is you have to fall back on these three things. I'll make other videos if you want to show case studies and examples of multiple time frames and complex examples to really solidify this. But after this video, I want you to go and backtest this. When you have zones where it looks like bearish breaker structure, but then market goes bullish, because areas where you think market structure and inducement looks confusing, investigate it on the M1 time frame and look for the three things of bullish breaker structure on a lower time frame, bullish strong momentum, and large imbalances on a time window. Those three things will lead to correctly identifying inducements and therefore momentum and large imbalances on a time window. Those three bullish strong momentum and large imbalances on a time window.
Indeed. Alright. So it's basically saying if we have bullish breaker structure on the lower time frame, right? Bullish momentum, bullish strong momentum. So I need to see what displacement, right? Large imbalances on a time window, which means that the price needs to be bouncing at the fair value gap on a higher time frame, or it's basically seeking liquidity, right? So you need to see what sort of situation you're dealing with. The context, in other words. This could be a sweep, depends on the type of scenario you're looking at. For example, like, could be any type of situation. So right now, as you can see, it's sweeping liquidity. So what does this say? See? Okay, not this, but it's basically refusing to go above 40k. So sorry, I wasn't looking at my screen properly, but you get the point. Alright, so it's basically simple as that. It's pretty simple. Okay, so we're gonna just basically look for the amount of candles, how much is going towards the upside, how much is going towards the downside. That's how we're gonna make a conclusion as to where the market is overall heading. Simple as that. It's sweeping liquidity right now, so I'm not trying to get in on no trade right now. And we're gonna retrace lower from here. So I'm just gonna use this sell limit right here, and then retrace towards the downs, which is all the way down here. But my ratio is gonna get choppier if my fucking stop loss is gonna be all the way down here. Because see, it's becoming a 1-to-1 ratio. At that point, it's not even worth taking the trade. I might as well just, So you gotta consider like the odds. So I'm probably just gonna use this as my stop loss and then get in somewhere like around here and stick to my plan. Because this manipulation is not gonna fool me as a fucking stop loss limit. Fuck that.
Those three things will lead to correctly identifying inducements and therefore knowing the difference between an inducement to fuel a move higher versus inducement along the way to know if a POI is going to break. And that's going to be correctly understanding inducements and therefore looking to buy as opposed to seeing the market come to a supply zone and given a bearish breaker structure like this and taking
Right, okay.
understanding inducements and therefore looking to buy as opposed to seeing along the way to know if a POI is going to break. And that's between an inducement to fuel a move higher versus inducement along the way to know if a POI is going to break. And that's going to be correctly understanding inducements and therefore looking to buy as opposed to seeing the market come to a supply zone.
Yeah, so it's basically between supply and demand. So if it's this type of scenario, it's unlikely it's gonna fucking create a fair value gap and go higher. I don't think he has an understanding of order flow though. I mean, he probably does, but it's not using for order flow properly. See, because its price is supposed to tap back into this range, and then if it taps back into this range, you can have a safe bet that the price is gonna go higher. But right now, it's not doing either. All right, it's not doing either. See. It's not really doing either of those. So this is going to be a bit of a gamble. So it's sweeping liquidity. That's what it's doing. See this manipulation leg right here. So I'm expecting price to drop lower and see a proper fair value gap and then retrace away from it towards sell side liquidity. It's pretty simple, right? It's pretty simple.
And given a bearish breaker structure like this,
see this? This was an internal term high. What was this? A liquidity sweep, right? We have a liquidity sweep right here. Swept liquidity, went higher. Where's this? Distribution. Where's this? Manipulation, accumulation, manipulation. What? Distribution. Proof what? This right here. This is just manipulating above the highs. It's trying to go higher towards, but then you have SMT divergence towards this outside liquidity. Why? Because Dow Jones is refusing to close above 40k, which makes sense because obviously we have the news, right? So yeah, plus we have read for the news day. So what does that indicate? That price is gonna go lower. Exactly. So what do we have here? So what are we waiting for, right? We're waiting for a fair value gap, a proper bearish fair value gap with proper displacement, maybe taps back into it and then retraces away from it. That's what we're waiting for, right? So we have a higher low, higher high. And what? I'm expecting a lower low, taps back into it. What is that? A bearish unicorn model. Towards what? Sell side liquidity. Easy. So that's what I'm expecting as price action right now. So if it does this, then I will get in and I will get out at the sell side liquidity. Simple as that. Let's look at the news right now. Drug prices after media care negotiations. Maybe nothing. Maybe a nothing burger for big pharma. Okay. Wall Street poised for high open on PPA. Starbucks boost. Interesting. Starbucks is part of the 30 stocks, right? Dow Industrials 40k. I'm not trying to go through like each of the each of the companies and just be like, hey, is your price going higher or lower? And make a assumption of that. That's gonna be the world's most boring thing that I could ever do, bro. Like, it is what it is, though. So it is what it is. Let's just wait for price action.
And taking out that level. Key information. And taking out that level to break.
Right.
And that's going to be correctly understanding inducements and therefore looking to buy as opposed to seeing the market come to a supply zone and given a bearish breaker structure like this and taking out that level. Key information that these structure in a lower time frame, bullish, strong momentum, and large imbalances on a time window. Those three things will lead to correctly identifying inducements and therefore knowing the difference between an inducement to fuel a move higher versus inducements along the way to know if a POI is going to break. And that's going to be correctly understanding inducements and therefore looking to buy as opposed to seeing the market come to a supply zone and given a bearish breaker structure like this and taking out that level. Key information that these are the ways you'll validate. Looking to buy as opposed to seeing the market come to a supply zone and given a bearish breaker structure like this and taking out that level. Key information that these are the ways you'll validate it. Momentum, bullish breaker structure, imbalances and time, these things will not lie. So if you see a bearish breaker structure at that level, key information that these are the ways you'll validate it. Momentum, bullish breaker
Momentum, bullish breaker structure. So momentum, spaceman, bullish breaker structure. That's considering the whole overall momentum is bullish. What? Time imbalances. Simple. So say watch out for BDRAs.
structure, imbalances and time, these things will not lie. So if you see a bearish breaker structure and then these three things, instead of looking to sell, be cautious and maybe even look to buy. And therefore the mantra of this channel, as always, a restricted trader is a profitable trader.
Right. A restricted trader is a profitable trader. I'll just see me. What?
Can you imagine a place where you would be guaranteed to make a 10x on your meme coins every 24 hours? This is
Crazy.
what is happening on this platform. I'm going to explain you because what is going on is crazy. Look at that. The price in the last 24 hours, we got plus 200%, plus 500%, 256%. And when I started to make some research about who is talking about those platforms, it's only the big profiles in meme coins. All the people that hold some retardio, and this might become the new way to trade meme coins that will surpass everything. Now, of course, they got a terrible website. So like these people who come first and don't understand memes will go away. But when you start to research, you're like, this is well organized. It's probably a bigger team than we think. Swap your memes for Ghetto Dreams, a beautiful lie. And I like it because on the home, they put the Taiwanese flag, which is a beautiful trolling pattern. And I love Taiwan. Actually, Taiwan is at $11 million market cap here, while China is at $14 million market cap. What I would love is to make Taiwan surpass China. So all the Taiwanese watching this video, 很好的就是你们可以做很多钱，所以你要听得懂我
Easy.
会说什么东西啊。Let's study everything we can do so you can be the people investing into those emojis that promise you to make a lot of money.
By the way, welcome on Hands Up Finance, where we study what's happening on chain because the blockchain is an open ledger, so we can see all the transaction and know where the attention is going. And this is where you can find your next 10x or your next 100x. So don't forget to put on your little matcha and let's get to it.
One thing that is important behind this unicorn, first, they're great.
That's crazy.
But it's a multi-chain experience. So you can either buy it on Solana or you can buy it on Base. As you can see, there was a massive pump at the beginning when it went up to $26 million market cap. Now this one on Base is at $2.4 million market cap. And when you check on Solana, it's at $24 million.
It's like a bit of a scam. A reverse promoted scam. Spell the cap. Sir. Okay, we're seeing momentum. Price action. Yes, sir. So it is using this fair value gap to go higher, but is it really worth it? No. Why? Because this is a sweep. This is like obvious. Even a fucking baby can say this is a liquidity sweep right here. You could get a 4-year-old say that. Let's wait for that. Let's wait for that. Why is ICT happening about?
Gangbusters yesterday. So anyway, I did not lose on purpose. By the way, I've teased a lot in the past, but I was generally expecting it try to get down here and move in my favor. But I saw what was likely to happen, and good old Phil over there slid some dials to the left and the right, and then came back for the stop, which is kind of like what I said I was going to do. If it's going to get stopped at, I was going to go up and bump my stop. Everybody can see where my stop was. I'm sure everybody was going to try to trade with the same thing, which is the reason why you want to watch me live trade anyway, because you want to copy what it is I'm doing. And once it hit the stop, dropped down and went to everything I outlined yesterday real time. So it's important to...
And search engines influence the outcome of elections. I think they're 100% right. And I think that if you don't have the favor of the Googles, and all your searches are being blocked, and by the way, the show is going to probably be blocked because here I am talking badly against Google. You know that, so you just get everybody to watch the show now. Just smash the like button. That's what usually helps. But it's true. If I get over 1,000 likes, people watch the show. And right now we're on 854, Josh. That's how it works. But I do think that they can actually sway the elections. And I think that what Trump realized yesterday, I think he's been realizing it for a long time. Either I'm going to make Truth Social work, but I'm going to risk losing the election, or fuck Truth Social. I've got to get onto X, and I've got to start being the president that I was, tweeting cool shit on X. I mean, I saw one of the tweets that he tweeted. Let me try and find it first. It was a tweet that said, hold on, I got to find this for you. It was really one of the best tweets. He said, I hope we never find another life. I hope we never find life on.
All right. If you want to launch a token though, you can just launch it from here. But you need to have a proper community on the Twitter, Telegram, and website. So plus you need to have like the graphics for it. So it's a bit of a bummer, but you can, you know, include the image, the graphics after you create it. You have to have the whole theme going, and then you need to have description, ticker, and a name. I'm not too sure what a ticker is, but the ticker is like pick a coin that you on the bonding curves at any time. When enough people buy on the bonding curve, it reaches a market cap of $69,000. This is bullshit. I mean, if it's for sarcasm, obviously. Fill cap liquidity is then deposited in radium and burn. Yes, sir. Ready pump. Show animations include SFW though. I don't think any of these dogshit coins are really gonna currently live streaming. Interesting. What's going on here? Interesting. Okay. Where's this on Solana?
Also get like a few big bites going after the sunset events.
Why is this mic volume so bad? See if this is valid. Seems to be on some like. Oh, it is. You can swap it right here. Okay, apparently. I have the wallet, but I don't really have any soul in my wallet right now, so I can buy it, but yeah, this is basically.
So that two people, let me see that also was nice.
This is basically gambling.
Also best for setting up.
Keep it a buck. This is basically gambling. Telegram. It says the website's decent. No, it's not. I don't like this website whatsoever. There seems to be live streaming this, but it seems like let's look at that Twitter. Yeah, it's a lot. What the fuck? Go make Cat. No, they only got a Telegram, so that's risky as fuck. I bet the Telegram link is also fake, so. Anyways, bombs away. What the fuck is this? Twitter? Let's see. Let's get the Twitter. Bombs away. That's crazy. Happy burn. See this right here? LP burn. BS dev team. Sender. Crazy, crazy. I'm not trying to fucking get in on some meme coin though. I have already gotten in on the meme coins that I should be getting in. Oh my god, we have Ron. Continuation to the Billy franchise. That's crazy. That's amazing. but it's not really. So the fuck deck screen or cat? That's cursed. That's a fucking curse, I swear to God. What the fuck is this guy doing? Is this the dev?
So
Yo,
this will definitely send, but in the same time, be smart with it. Take your initials out. Please take your initials out. And then you see a huge green candle. You see us at 150 or 200.
oh man. 100x my ass. That's what she said. No. Let's look at the Twitter. Let's look at their website. Is their website great? Oh, well, look at this. With the next 100x with a 2 follower market cap. No. This website is pissing me off the back. I'm not investing in it. Fuck that. Fuck your dog shit coin. You can suck my wee wee. Cappy. Nah. Donald Trump. Safe again. Massa. I mean, he is the mass murderer. There's no Twitter, so fuck that. Not trying to get in on any of these coins. I'm just doing this for fun right now because I'm kind of bored because market is not really doing what I'm expecting it to do, as you can see. Cat sex, that's crazy. Godzilla. It's kind of funny though. Godzilla. The kind of complicated memes, so I bet nobody's really gonna buy into this bullshit. So
Dollar market.
fuck this. Yeah, it's not even loading. That's crazy. Nuggets. Oh, wow. I almost got banned from what I saw on my screen. That's crazy. Twitter is not working. Website? What about the website? Okay. Scamming ass fucking coin. Not trying to do that. Anyways, let's look at if Arjo came up with one of his new. Arjo seems to have watch this. Over there. Sharp turn entry model. Let's see what this is. It's sweeping liquidity. Look at this. Sweeping hella liquidity. See? It's a bunch of bullish momentum. But at some point, it's going to take out these highs. See? The 15-minute fair value gap is going to be validated at some point, so trying to wait. Patience. Fair value gaps don't work unless you use this. That's why. Let's see what this is about. I'm not trying to.
So do you want to hear something that's absolutely insane? Based on the data in the MMT, funded traders make an average of $13,280 within the first 3 months of consuming our content. Now that's insanely fast, and it's better for you to assume that it might take you longer. So the money-making team is in fact making money. But how can we make sure that you get there as well? By mastering the 3 concepts in this video. Every concept that we're going to go over adds on to the previous concept. So the first concept is market structure. In market structure, we work with the following: intermediate-term highs, intermediate-term lows, short-term highs, and short-term lows. So an intermediate-term high is this high right there, and an intermediate-term low is this low right there. What makes this an intermediate-term high? An intermediate-term high is a swing high, so that 3-candle pattern again, a swing high lower to the left of it and lower to the right of it, like we have with this intermediate-term high.
Yeah, I'm a dinosaur. I'm the fucking dinosaur, bitch. Alright, my bad. Alright, whatever. As long as we have everything in place, I guess. Because right now things are kind of pissing me off. I'm gonna keep it a buck.
Outside right here. So we have intermediate high, intermediate high, intermediate high, intermediate low right there again, and then creating a new intermediate high.
So we have intermediate high, intermediate low, intermediate high, intermediate low, and intermediate high. But in between these intermediate term highs, we have a what? Long-term high.
Right there. That makes them outsiders. Now, in between this intermediate high and that intermediate low, we have something called short-term highs and short-term lows.
I mean, we have short-term highs and short-term lows as well, but then there's in between the two intermediate term highs, we have a long-term high. So
if we expect higher prices, we expect short-term lows like these, for example, to hold. Those short-term lows are nothing more.
Intermediate term high, intermediate term high, intermediate term high. We have a long-term high right here. In between these two. So traces taps back into this range. And then look, market structure shift into intermediate term high. Tap back into it. You retrace below it, and then you trace above it towards fair value gap. It's pretty fucking simple. It's pretty fucking simple. It's the easiest shit you can ever do, honestly. But sometimes it gets a little confusing, so that's a little annoying. But I mean, it's pretty easy because you see this displacement right here, the 15-minute. Look at that. This candle is not formed, so I need to check back in like an hour to entry, because I'm not trying to entry off some dog shit entry, bro. So that's like the worst thing that I could possibly do. So I'm trying to like entry off like a proper fair value gap. Let's see.
More. Then swing lows with a fair value gap in the same leg. So what is that same leg? Well, when we create that swing low right there, immediately after, we want to see a new fair value gap being created before we get a new swing low. So the order should be swing low, fair value gap, swing low again. But it should not be swing low to then a new swing low already. Because when we have a swing low directly after that, a new swing low without a fair value gap in that leg, that tells us that that leg is not as high probability, not as strong as a leg with a fair value gap in it. For example, this right here. That leg, that tells us that that leg new swing low already. So the order should be swing low, fair value gap, swing low again. But it should not be swing low to then a new swing low already. Because when we have a swing low directly after that, a new swing low without a fair value gap in that leg, that tells us that that leg is not as high probability, not as strong as a leg with a fair value gap in it. For example, this right here. We have this swing low.
Yeah. internship and you're confirming that. That's what they said. No, they said like 1 year is too long for them to just not do anything at all. So they said again they have no choice at that point. So they said might as well just go for an internship. So depends, because some people actually don't really want to do an internship. Like
Low right there, followed by fair value gap makes.
I'm not interested in doing an internship. You know what, how internships go. It's 1 year. That's why like people in general weren't interested in doing internships, but it's just that now they can't wait for a whole year without doing anything at all, right? So now they're going for it. So like basically they're not really giving you a choice. So even the people that don't really want to do an internship have to be forced into it. So yeah, it's a dog shit uni. All right, I'm back. Sorry to anyone who saw that dog shit mail on my screen. It's just a pile of junk. Don't worry. I gotta go for 3 minutes because I gotta take a dump. But I'll be back in 3 minutes. All right.
tells us that that lag is not as high probability, not as strong as a lag with a fair value gap in it. For example, this right here, we have this swing low right there, followed by a fair value gap, makes this right there a short-term low, a strong short-term low. Afterwards, we create new swing lows, but not new fair value gaps,
I'm back.
making those
Sorry.
not good short-term lows, not strong
Exactly.
short-term lows. Then what you'll see is when moving towards an intermediate fair value gap makes this right there a short-term low, a strong short-term low. Afterwards, for example, this right here, we have this swing low right there, followed by
The strong short-term low.
a fair value gap, makes this right there a short-term low, a strong short-term low. Afterwards, we create new swing lows, but not new fair value gaps, making those not
Watch out. Sec.